Welcome to Trade of the Week with me, Zinati Puma. Today, Rob Pietropaolo, co-head of trading at Unum Capital, joins us for a technical analysis of Aspen, Bidcorp and Bidvest. Thank you so much for your time, Rob. Quite interesting ones that we have seen. Of course, we are in the middle of results season, so we have seen results coming out of all three counters. Let's start off with Aspen because a lot of people have actually been flocking to it. We saw on the day that it released results, there was a lot of buying activity. The stock was up 12 or 13%. Even yesterday, I did have an analyst coming in speaking about the fundamentals of Aspen and why he has chosen it as his stock pick. But today you are actually giving us the technical picture.
Yeah, I think traders and investors alike were relieved on the last results, and we can see that by the price action. If we just look at what Aspen had done when they released their full year results, we could see the disappointment, and there was a lot of selling, and I think investors are warming up to the stock now. But also I think given the recent volatility in markets, I think Aspen has become more of a defensive play option for traders and investors because it really has been volatile, especially if you look in the resources sector. Retailers have also been up and down, and banks, they don't even know where they stand at the moment. So we can see all the banks are down today. So I think a little bit of defensive mindedness when it comes to picking stocks. And I'll be honest with you, this week and last week has been extremely difficult, I'm sure for any analyst, to try and find a really high conviction trade because the noise has just thrown stock prices all over the place. But anyway, we managed to find some for today. Talking about Aspen, if we just look at the technicals here, we can see, as you mentioned, those half-year results came out. And very interestingly, as it got back to the top of that for the last sort of 4 or 5 days, we can see investors have been selling what they think is the top, or traders at least, and selling what they think is the bottom. So it's created quite a few spinning tops, which in a way gives you a little bit of uncertainty. But when we look at chart patterns, this is quite a bullish setup. We like to call it a flagging pattern, which is quite bullish. So, you know, after spiking on the back of those results, we can see that the price has sort of found a base, but not a new top yet. But if we just zoom out a little bit more, we can actually see where we stand in the bigger picture. So, as I mentioned, those full year results, you can actually see how much pain Aspen investors have had to endure since when they released those results in September. And we've got this rounding bottom now. And then again, as I said, when they released these half-year results, we've got massive relief, big spike up on the day, and we haven't seen it pull back yet. And I think the defensive nature of the stock is going to stand it in good stead. So I think, you know, the stock hasn't become, well, it is a little bit overbought, but I think it's finding a base here. Very, very likely that investors or traders are comfortable picking up stocks at this level on the back of those half-year results. They looked pretty good on the outside, and as you said, you've spoken about the fundamentals. From a technical perspective, it looks like it's trying to form that rounding bottom, and as I said, this is quite a bullish box or flag pattern. So I think if you can pick up Aspen today or even this week, sort of at current levels or about R2 lower would be perfect at the bottom of that box. So it's sort of just below sort of that 179 or 178 level. 175 would be perfect. But I think there's some nice upside here in the short term. I don't think we should be looking for too much given the volatility that we're in. But I do think Aspen makes a run to that 200-day moving average in the next few days. I'm hoping to see a breakout of this box because I like the stock, and I think there's a very, very quick and easy sort of 9 to 10%. If we take it off just below 200, I think that'll be a very good trade for the week, or at least for the next 10 days.
It's really interesting to see, I mean, just looking at it from this period to the time that they released the full year results or half year results. And I guess it also really just emphasizes that it's either a hit or a miss. It's never really one trend with Aspen. Sometimes they miss, sometimes it is a hit, just like they have been now. But just you talk about that box where you're hoping that it will break through that box. Could there be any levels that maybe investors need to, traders need to be looking out for? Any levels for stop losses and then those kinds of, I guess, cushioning?
Yeah, I think it depends on your time frame. I think longer term investors can buy the stock at current levels with reasonable level of comfort. Traders, on the other hand, they're trading on leverage, taking on much more risk. So trading the box is probably the way to go, and it sort of gives you a good indication of where your stop loss and your take profits should be. So just in terms of this, you'd be looking to buy it close to 175 Rand a share. So you're still trading within the box, even if you picked it up today at sort of 177, 178, hoping for that breakout of the box. And then obviously, as I said, to test that 200-day moving average. Hopefully we see $200 there, and then you're sort of in for 10, 11% on the stock. And we can see just below the box, the red line there, that's the 50-day moving average. I would be placing my stop loss there. So I think a breach sort of below $170 would be my signal to get out, and maybe look to be getting back in at the bottom of that sort of range, that bottom rounding where that green candle started when they released their results. You don't want to be holding it through too much pain as a trader. You want to be in and out for those nice short-term leveraged profits. So yeah, trading the box makes it quite easy. The levels are quite visual. So the minute you break out below that box, it's a signal to get out. But what we really want to see is a nice little run up to above $190 a share.
All right. Well, let's get into Bidcorp. Of course, they are also another counter that is exposed to a number of countries in the world. And of course, we see those currency kind of mismatches there. But nonetheless, they did still report on growth. Quite a few countries that are experiencing slower growth than they would like, but still looking good. What does that technical picture look like?
Yeah, look, Bidcorp's obviously the spin-off from the Bidvest group, and it's more the food services side of things. So very much affected by global scenarios, especially when it comes to hospitality and travel. But from a technical point of view, no matter which way you slice this, the trend is still up. So yes, there's been quite a bit of profit taking, maybe a little bit of, I wouldn't even call it nervousness in the market, but the stock has, to me, reached the bottom of this upward trend in oversold sort of territory now. So to me, this stock looks like there is value for traders here, especially if you're a trend follower. This is probably the right spot to be buying it. I hope we get a chance today to pick it up, because I did notice the stock was slightly down this morning, which would have been a nice little sort of position to start accumulating a long trade on this. But this is what I mean when I speak about that the trend is in place.
Yes.
And we're going all the way back to June last year. So yes, we can see the highs are getting higher over time. And so are the lows. So that is quite a bullish indicator, and I wouldn't stress too much about the fact that the stock is trading below both the 50-day and the 200-day moving average. Normally, we don't like to see that. It is a sign of weakness. But in terms of where the stock is now and the regions in which it operates, yes, it is sensitive to the currency. But if you're trading a trend, the stock has now become quite oversold. And we can see this trend is also starting to create like a bit of a broadening pattern, which opens up a lot more upside. And again, if you're trying to find the bottom or where to place your stop loss, should I say, again, this tells you exactly where you should be if you're following the trend. The minute you get a breach of that lower band, probably a sign to get out and wait for a better entry point. But the way things are looking now, I think Bidcorp does have room for more upside, and potentially, depending on your time frame, to even in the next 3 to 4 months create a new high for the stock.
Yeah.
If we just look at what the setup looks like, I've indicated there how oversold the stock has become, and we are looking at a period sort of from the beginning of February. There's been a big drawdown in the share price. So if you're taking profit there at around 485, 490, you've done well. But I think now's the time to get back in. Even at current levels, anything sort of around 430, 435 should be a great entry point, especially when you're hitting this broadening pattern in a rising trend. And I wouldn't be surprised again if the stock went and retested those February highs.
Okay.
at 485, which leaves you, these short-term traders, another 10% in the market. And if you've got a little bit more time on your hands and you hold it for the next sort of 3 to 6 months, I think $500 is on the table, especially for Bidcorp. And you asked about the stop loss on the previous trade.
Yes.
Any breach below that line, and I put it at around 425. So you're risking yourself about 10 Rand on the downside,
Yes.
but the upside gives you a lot more value. So this risk to reward is sort of a 2 to 1. I think, 2 to 1 risk to reward ratio. I think there's a lot of value in Bidcorp now, especially for short-term traders.
Okay. Yeah, and I guess for investors, maybe the dips that we have seen are maybe just a little bit of concern on the slowing growth, but I mean, even the CEO did say that this is quite a commendable performance considering the challenges in the macro economic environment. So yeah, assuming that this is quite a resilient, also maybe defensive stock on that front. We're talking about defensive. Bidvest is also seen as quite defensive, and of course, you mentioned the spin-off of Bidcorp from Bidvest. Bidvest also showing a little bit of slower growth, but still quite a resilient performance.
Yeah, look, what I like about Bidvest is the diversification that it
Yes.
offers you, because this is more sort of the goods and services business, and they spread around from logistics to trading to insurance
Renewable energy
to banking. So if you're looking for something defensive, especially in a very loud market like we've got at the moment, this is probably the way to go. And again, a very interesting setup for a diversified business of this nature. I'm actually quite surprised that it's pulled back this significantly, and I think everybody was a bit nervous waiting for the trading update, but it didn't disappoint, I don't think. But let's stick to the technicals.
Yes.
Again, the stock has also become quite oversold in the short term, sort of all the way through February into this first or second week of March. But very interestingly, there's quite a multiple sort of test of this 230 Rand level, which is held every single time, going all the way back to December 2023.
Wow.
So the fact that the stock has held this level really tells you a lot. So we're in an accumulation zone. So even for a longer term investor, this is where you should be picking the stock up.
Okay.
Shorter term investors, we're looking for short term moves, short term bounces, getting in and out of the stock a lot more frequently. But I think as a longer term investor, I think the stock for the year, defensive, diversification is the name of the game. You can't put all your eggs in one basket.
Never.
This 235 Rand level really looks key to me, and this is where we should be looking to pick up stocks, and these are the setups we should be looking for in a difficult market. So again, what do we expect for the shorter term traders? I do think the stock makes a test for that 50-day, sort of the 50-day or 200-day moving average. The 50-day has been pulled down given the sell-off over the last few months, but the 200-day moving average has sort of maintained its level. So I think there's 30 Rand to be made for short-term traders, and even more over the next 3 to 6 months for the longer-term equity holders. I do also think that this stands, from a local stock perspective, we can see what's happened overseas, especially the US markets last night. There's a bit of panic going on.
Oh, yes, there is.
And I do think that investors might be turning their attention to a little bit more risk, but getting a little bit more value. I know that we've seen a lot of foreign outflows in the local market, but I see it coming back where those offshore investors need to find some yield or some value. And I think some of the stocks like Bidvest and those diversified guys are probably where they'll start looking. And this 230 Rand level, you probably get it at that level today, is where we are picking it up for a nice little 10-11% bounce, and then we'll reassess.
Okay. It's quite interesting because this 230 level, as you've said, it's tested it quite a lot, and it hasn't really breached below. We're not too far from that. What then does one need to do if it does break below that 230 level?
Well, I think if it does, then we don't know how much downside there's going to be, and that's what stop losses are for. Every successful trader will tell you that the way to make money is to protect your losses. So, if you mitigate your losses and defend what you have, then this is a very easy game to play. So once it breaks sort of below 225, you could probably assume the stock is in a little bit more trouble than we think, but I doubt it, because this is a very, very significant support level. We can see it. It goes back to 2023. So the stock didn't even touch that when they released their trading update. It spiked immediately. And you can tell that this is yet another significant accumulation zone. So a lot more safer for the longer term investor. But if you're a short term trader, breach of 225, rather get out, bail out, take your little bloody nose and wait for the stock to stabilize and come back above that level for a re-entry. But for me, this is a no-brainer. Significant level. There is a good chance of upside here, even if it's 11%, 10% for a short-term trader. Again, on a leveraged basis, that's not a bad little take for the next week or so.
All right. Well, thank you so much for your time and giving us that technical picture on Aspen, Bidcorp and Bidvest, Rob, and a little bit of fundamentals as well. We can never completely leave those out. That was Unum Capital's Rob Pietropaolo. That's all for this week's segment, but do stay tuned for lots more coming up right here on Business Day TV.